Welcome to the Sector Spin with Terry. In this video series, I share with you what I'm observing in various sector industry subgroups. Okay, so the market has been in a correction here following the new all-time highs set in the last trading days of 2021. In a perfect world, the market would always go up. In reality, the market moves higher in a series of swing waves. Longer term move of the market remains upward, that is bullish in the longer dated time frames, but during periods of these intermediate declines and a larger uptrend, I focus my energy on identifying new opportunities to pursue for when the correction completes itself and the uptrend resumes. Now here's a chart of the S&P 500 using daily candles with some longer term trend lines drawn on the chart. This overhead line is drawn through the highs starting back in April of 2021. It crosses through the highs here in September and in November. And this overhead line marks the psychological overhead resistance level in the longer term uptrend. Now, taking a parallel copy of this line and projecting it from these March 2021 lows gives me a visual range where I expect to see the market move while it's in this longer dated uptrend. Now you can see, since setting the most recent all-time high in December, the market has made a bit of a pullback. Let's take a little measurement here and let's see how much it's been. Okay, so coming off of those all-time highs, looks like the market has been in about a 5.5% correction. And I think that's very similar to the size of the decline that we saw. I mean, obviously you can look at the chart, you can see the distance measured here is about the same, but let's go ahead and just use a tool here. Price measure, we'll take it from here and go down to right there. And yeah, so September's decline was about a 5.2. We've seen about a 5.6. This decline here that we had in November through, well, basically the whole month of November. Sorry, let's do that again. Price measure. Let's just take that. Measure that as 4.5%. So not significant declines, certainly not large enough declines that we would declare a bear market in place. It's enough to give investors a little bit of fear and uncertainty in what's happening. Okay, so this pullback that we call a corrective move remains well within my longer dated trend channel. Therefore, I deduce that the uptrend is still in play. Now, when the market moves down here into the lower range of the channel, I start to look not at what stocks are falling, but at what stocks are holding their ground and possibly even improving their position relative to the S&P. Now, we use technical analysis terms such as relative strength ratio and relative momentum ratio to compare the performance of individual stocks with a benchmark such as the SPX. Now, in general, I'm not only searching for stocks that currently are outperforming the benchmark. I want to find those stocks that are heading in the right direction to where they will, in the near future, hopefully while I own them, outperform and or continue to outperform the benchmark. Now for this, we're going to switch over to the relative rotations graph. Now quickly, if you've been following my service, you know that this relative rotation graph plots the relative strength ratio along the x-axis and the relative momentum ratio along the y-axis with a reference point called the benchmark. In this case, the S&P 500 index, the SPX. The vectors here are 4 weeks long, and they show me where these stocks were or have been in relationship to the S&P over the last several weeks. So you can see inside these line segments, there's one line segment, 2, 3, 4. There's 4 line segments here. So this line segment here started back or ended December 31st, and the current line segment is dated to January 21st here. So tomorrow will be the close of this week. And each of these are a week long. So by looking at these vectors, I can tell where they've been and where they are going. And ideally, I'd like to find the stocks that are going to move over here into this leading quadrant and remain in this leading quadrant. Stocks that are already in this quadrant, you can see, are marked here in green. And these stocks currently are outperforming the S&P on both momentum and relative strength. Momentum's maybe neutral here for Diamondback Energy and ConocoPhillips, but anything up here in this green quadrant is outperforming on both metrics. Now I can animate this, and I can go back even further in time. I can go back in history, and I can kind of watch the animation evolve. I can watch the migration of the stocks, and I can use this data to interpret and improve my predicting ability for selecting stocks that are going to be good candidates for my next trades. I can also increase the length of the tail, but I found that using 4 weeks kind of keeps the it's a reasonable compromise with the visualization so as not to get too convoluted. All right, for this next part, I'm going to show you how I use the scanning manager inside Optima to screen for stocks meeting my custom criteria. You've already seen a sneak peek. This is actually the results of that screen, but let's see how we did it. All right, there's a tool in Optima called the Scanning Manager. Inside this Scanning Manager, you can create your own custom scans using a wide variety of technical tools. It's very easy to use, easy to learn, but it is very powerful and you can make it simple, or you can make it complex. In this particular case, I have chosen to screen stocks out of the S&P 500, stocks that are currently in the S&P 500, using the last bar. So that's going to be the last available data that I have here on a daily time frame, and multiple codes. We're going to generate multiple codes. So inside here, I'm going to add a criteria, and I'm going to just do this with a script. Okay, and these scripts, actually, I can save them, give them names and things like that. Now, I'm not going to really try to teach you this scripting code language, but it's not very difficult to understand. But basically what I've done here is I'm going to look for stocks that are heading in a northeasterly direction on the relative chart. So I want to screen for that. I want to screen for a couple of more things. I want to screen for the fact that they're fairly high volume traded stocks. So in here I think I've got over 1 million shares a day traded. And I also don't care too much about low priced stocks. So I'm going to screen for the last price at least greater than or equal to $50. Now the next little trick here is that I'm screening for stocks that are in a combination here, basically moving between 0 and 90 degrees. Okay, and if we go back and look at the RRG here, the top of this, just think of it as a compass, is 0 degrees, and we rotate to the right to 90 degrees. Okay, so I can tell you that the heading here on Vertex Pharmaceuticals is 76 degrees. It's down there in the table. Now I can read those headings. AbbVie's 85 degrees, a little bit more rotated to the right. Apple is 81 degrees. Okay, we can go over here on the left and look at this one. So Global Payments has a heading of 38 degrees, right? So these are all in that zone. All the stocks that I've got here are meeting that criteria that they are heading generally in a northeasterly direction. Why do I want that? I want northeasterly. I want easterly because that means past relative strength week over week over week is continuing to increase. I want momentum rising, not falling, because that's really where the institutions are moving money in or out of these stocks. Okay, so accumulation or deaccumulation is happening a lot. So a combination of those two means that we are moving in a northeasterly heading. Let's go back to the scanning manager because there was something else in here I also added. There's another factor in here called distance. And that distance factor has to do with my 2 standard deviation circle here. It's not exactly a circle, but we can stretch it or make it a circle. This region here represents the 2 standard deviations of all of the stocks that are in this particular group and how they are related to the performance of the S&P 500. Now there's a measure called a distance ratio, and it's there in the table. Let's look at AbbVie here and read the distance. The distance says it is 7.26. What I'm looking for here, and I set that distance factor at 5 arbitrarily. I didn't actually measure and say exactly where I wanted it, but the distance here is 9, and then this distance here is 9. So effectively, the relative strength ratio distance here is about a 9, and I just picked a 5. But okay, let me get back to the reason I don't care about stuff that's right here at the origin. Why not? Well, if anything is sitting here at the origin, effectively it is performing the same as the benchmark. It's doing what the S&P is doing. It's not outperforming the S&P, it's doing what the S&P is doing. Okay, so stuff that's in the middle here is less important to me. I may or may not really want to go far out either, okay, because there's another reason, simply because of the very low relative strength ratio over here, maybe not to be that interested in PayPal or Global Payments or Fiserv, okay. They have their opportunities, but that's not the focus today. So I could have actually filtered a distance range and said, you know, between say 5 and 10 or 5 and 15 or something like that, and then try to get an annular locus around the origin here. Okay. All right. So again, I'm an engineer, so I'm going to use mathematical terms like that. So just forgive me if I wander off the topic there. Okay. So I have in this criteria, and you can define this criteria any way you want, and this is just what I've done. Okay, so we apply that and we execute the screen, and you can see it running through here, and it's searching the entire list of the S&P 500, pulling all of the data that matches the criteria, and it's going to give me, once it gets complete here, we're going to get the results of that. Okay, and I've got 30 to 31 results, and I actually, just for brevity's sake, went ahead and put it into an RRG. This is a very easy step. I just didn't show you how to do that. But this is that selection of stocks that came from that screen just today. This is Thursday, January 20th, and it's market closed about 45 minutes ago. So this is data as of that point in time. This list of stocks, let's talk about the colors here. Okay, so these green colored vectors, there's a reason that they're colored green, and there's a reason these are blue, and there's a reason these are red. Okay, these green colored vectors indicate that the weekly price trend of the underlying stock is actually in a leading condition. Okay, and we know that not just because they're in the leading quadrant, okay, because some of these are down here in the weakening, but their price trends are actually outperforming and leading the S&P. Even though there's maybe a downtrend in place, this downtrend here is still in a condition on the weekly price charts that it's where it's outperforming the benchmark S&P. Now the blue represents an improving trend. So generally we want to go away from red to blue to green, and from green we go back to yellow, and there's no yellow on here, but yellow is weakening. And so that's how these rotations move. I can animate this back, and you can possibly see some of the different colors come in. Sometimes there's some yellows there. This is a pretty strong selection. So if I go all the way back into late August, you can see quite a few yellows. Okay, so these leaders, their price trends started weakening right before the September correction. A lot of them were lagging, okay, and they were underperforming the benchmark at that point in time. And then there was a group that started rallying and turned blue and then turned green and moved over in the leading quadrant, and now many of these, actually a lot of these energy stocks, they collapsed dramatically, but then they rebounded dramatically again, and then now they're moving back up north. But at the moment we now have another group that I'm interested in, and that's these ones that are set up here in blue, which means that they have an improving weekly price trend. Now, in the scanning manager, I've built a code where I can add that code. Let's see here. Yeah, let's cancel that. Let's go ahead and add I've got one in here called blue trend bar. And it just knows that through this function call, the built-in function call, that I'm looking for the improving trend. Okay, so we did the first screen, and the next thing is we're going to run this screen one more time against the sub list. It'll run it against the entire 500 again, generate this 30 to 31 stocks out of this, and then it's going to filter it the next time to find those that meet my my blue trend bar. And it's just about done. There we go. So we got 8. I got 8 stocks. I've already, again, put those in a list up, a tab up here just to show you. So here's those 8 stocks. 1, 2, 3, 4, 5, 6, 7, 8. And you notice that out of that list, all of these are blue. Okay, so we've got Newmont, Lockheed Martin, Amgen, MasterCard, IBM, Bristol Myers, Philip Morris, and Lyondell Industries. Now, these are in many different sectors: materials sector, industrial sector, healthcare, fintech, so technology, financial technology. Technology here, IBM, Bristol Myers is healthcare, Philip Morris is consumer discretionary, and LyondellBasell is materials in the chemical subgroup. So none of this is not collectively out of one single sector, but the fact is this subgroup of stocks is demonstrating the characteristics that we want to see for potential candidates moving towards future outperformance of the benchmark. I hope you will follow us at tradinganalysis.com, become a subscriber so you don't miss out on how we leverage this powerful technical analysis tool to provide our clients with quality market analysis and guidance to safely navigate the volatile times we have in the market. Contact us at info@tradinganalysis.com if you want to know more about how we can improve your trading. Best wishes in all your trading ventures.